This week, a couple dissident investors were elected to the ExxonMobil board. And the reason they were elected was because they wanted ExxonMobil to become more green. So we're going to take a couple minutes and talk about what green investing is and how you can make a determination whether your investing priorities are green or not, and how to evaluate potential green investments. The environmental future of our planet is really uncertain. To better understand how you can help, some investors are interested in green investing, looking for ways to invest in environmentally friendly companies and help them grow more rapidly than their competitors who don't focus on the environment anywhere near as much. Investing money into those companies will hopefully provide both them with the capital that they need to be able to grow and provide you with income generated without adding additional stress on the planet that is providing us with our lifeblood. So what are your green investing options? Well, there's really three primary ones. There's individual stocks, and when it comes to evaluating stocks, green stocks are no exception to the general stock evaluation rules. To make sure you're investing your money wisely, take the time and effort necessary if you're going to invest in those individual stocks to do a thorough investigation of any potential candidate company before making that investment decision. You shouldn't just invest in a company because they say they're green, and I'm going to talk about some of the things to look at from a criteria perspective here in a minute, but make sure that the fundamentals are sound and that you believe in not only the company's financial but also product prospects as you're making that investment. Investing in individual stocks is sometimes a real challenge. You're kind of betting all on kind of one individual company. It's not widely diversified, and so as a result, make sure you do that fundamental analysis. Number two, you can invest in mutual funds or exchange traded funds that have socially conscious or green investing goals. It's easier to diversify your portfolio with mutual funds that specialize in green investing than trying to identify the individual stocks, evaluate them for how green they are and their investment criteria. Those funds go and invest in companies that back green ideas, that have made commitments to environmental stewardship, or have done other projects, or are committed to making the environment better. And also, if you're looking at a more broader or a more broadly oriented social investing fund, are really designed to help their communities at large. And there's a number of funds out there, so you can look at those and kind of make a determination and invest in mutual funds or exchange traded funds, ETFs, that are green oriented. And the last one is green investing bonds. And green bonds are a great way for businesses or municipalities to raise capital. Normally, those bonds, particularly if they're municipal bonds, are going to be attached to a specific project. So it may be a solar project, or it may be a reclamation or wetlands remediation. And those funds go toward green business ideas or projects that benefit the environment or the community at large. And as a result, you're able to make an investment that's got a little bit more stability and security, but is still helping move those projects or investments along. Now, there's four important green investing ideas to keep in mind as you're making the determination on where and how to invest. The first one is know your green investing criteria. To make suitable investments, you need to answer questions like, what companies are green? And what industries will I refuse to support? Figure out what your tolerance level is and find investments that feel right for your values. Here's a few things to think about. Would you invest in a logging company, for instance, if it followed all the rules and regulations about sustainable practices, if it was following all best practices? Or are you completely against investing in logging companies? What about one that generated toxic waste but disposed of it in a green way or in a responsible way? What about a company that was, and I'll use BP for instance, who is largely an oil producer but has made a significant commitment to green energy development? If you're willing to take on the risk of a company that is developing new green technology, so It's not an old line company that's transitioning to green or that's made green commitments, but is developing new green technologies and are smaller companies. Those have the potential to make you a ton of money, but most of them are going to end up on the scrap heap of investments. And so just recognize that the risk with those, emerging technology companies that can go to the moon, most of them end up flaming out on the launch pad. So just be aware as you're making those investments and understand what your criteria is for classifying a company as green or worthy of your investment based on your value set. The second thing to look for, and I had alluded to this a few minutes ago, is watch for greenwashing. Be careful of companies that will make you feel like the company is actually green and they've ramped up their marketing to make themselves appear green, but they really haven't done much in the way of following best practices from an environmental perspective. Some companies will do anything to get their hands on your money, will do anything to get their stock price up. That includes stretching the truth about how environmentally friendly they are. Do some research, and there's easy ways to do it online, as well as contacting the company to ensure that the company statements are accurate and that the company's approach to the environment aligns to your values. Greenwashing is everywhere, and you need to be able to separate the wheat from the chaff and figure out which companies are truly green. Number three is evaluate all of your investment options. Analyze green investments the same way you'd analyze a non-green investment. And be sure to use your green criteria as well. So it's got kind of two layers of investment analysis. The first one is fundamentally, is this a good company to invest in? And that's kind of screen number one. And screen number two would be, do they follow what you have classified as green investing criteria that you had set earlier? If they meet both of those criteria, that's probably a green light, pun intended, to go ahead and make that investment. If you get either one of them doesn't quite chin the bar, doesn't quite do enough, then you might want to look elsewhere. It's important to not lose sight of the fact that this is an investment in the company, and it's not, just a donate the money and hope for the best. If you want to do that, there's a lot of not-for-profits that are green oriented that you can give your money to rather than pouring it into a green investment that doesn't meet basic investment criteria. The Dow Jones Industrial Average and the S&P 500 are generally cited as representations of how the market in general are doing. But there is an index that tracks performance by those looking at companies with environmental and social standards, and that's the Domini 400 social index. Those firms have been outperforming generally the S&P and the Dow over the last 10 years or so, despite recent dips. So you might want to look at the companies that are in the Domini 400 social index. That's spelled DOMINI, and you can see it down below as well. And those companies are ones that have already, again, they may not meet your criteria, but they've been pre-screened and kind of give you at least a narrower funnel to look at. You can use the 400 in a Domini index to compare green mutual funds and track their relative performance to the overall market. It would be best if you also compared those to non-green alternatives and just make sure you're getting the best, kind of the best of the best. And the fourth one is look for advisors who know green investments. You may be able to find the answers you need on your own, and there's a lot of information out there, and I want to make sure you've got what I've got available to you. But if not, there's some investment professionals who are going to be able to help. There's financial advisors who specialize in green investments, and they can provide excellent advice to find what you're looking for, do that screening for you, and come up with recommendations. It's important for you to stay on top of the latest trends in green investing. There's a lot of websites out there that provide the information without being biased. Some are going to be great resources for you looking to invest responsibly and to do your own investment research. But if this is something that's really important to you and you're not comfortable doing your own research, make sure and ask those questions of your advisor to make sure that they're green friendly, and if not, find an advisor who is. And there's a number of them who are becoming more and more open and marketing themselves. Again, beware of the greenwashing at the advisor level as well, of being green friendly investment advisors. We all need to be making serious long-term investments in clean energy. As the population continues to grow and as we continue to industrialize, especially in a developing world, there's going to continue to be more and more and more draw on our natural resources. And the need to develop green technologies is an absolute necessary. It's not an option. Some green companies that we can invest in today that are larger, that are well known, are ones like Tesla that have committed to do a green approach and are forward thinking and somewhat progressive in their thought process. Apple, as well, has made commitments toward renewable power sources like solar panels with their headquarters and invested billions in new technologies. Um, there's some other great opportunities with green mutual funds. Don't get caught up in the hype of green investments, however. Your best bet is to research your options, choose wisely from those that fit within your investment criteria for sustainable investment and a good financial investment, and you can feel good about your portfolio as you drive to FI. Until next time.